Congratulations, you're retired or you're focusing on retired and you have at least $1 million worth of assets in your retirement plan. You're ready to commit, you're ready to relax, and you realize that you're still paying a lot of money for car and home and personal insurance. So today we're going to talk about how to get the best rates for insurance, but also what levels of insurance you should be looking at. Hi, I'm Mark with Think Insurance. I'm here to help you save the most by getting the most coverage as possible and finding the right fit for you. Moving into the retirement phase, that's a feat in its own. Congratulations for getting there and for having the ability to have the funds available. If you're around $1 million worth of assets and you're planning the retirement, you're likely going to pull out anywhere from $60,000 to $75,000 a year out of the retirement plan. The first piece that you're going to want to know is that retirement can't actually be affected. In example, if you get sued for some reason, typically the retirement plan or program is excluded from being in a lawsuit. So if you end up having not a lot of money outside of your retirement, you don't own your house, you don't own your cars, you don't have a lot of assets to protect, and you have money in an account, that account is going to be protected from any lawsuits that you may occur if something major happens. Now, the downfall is you've probably injured somebody or are liable for something, so you want to make sure that you're covered correctly in either situation. The other part that you have to make sure is that if something does happen and you do take a large lump sum of it out, that it doesn't get deducted or it doesn't get proportioned out to other people. So let's go over the home, auto, and personal lines type of insurance that you should be looking at. Now I've got my whiteboard here and I'm going to show you the different types of policies that you should be looking at. The first part is going to be your auto insurance. The second piece would be your home insurance. And then the third piece is something that we call liability. Regarding your auto insurance, it depends on what type of vehicles you own. If you own a Mercedes or a high-class, high-end vehicle, let's just say $70,000 or more in value, you're going to have a couple issues. The first is you're going to have the issue of having the right company that's going to insure you. A lot of companies, depending on the model, if it's a sports car, you may have a different insurance that you have to go to. If it's a collector car, you're going to go to a company like Haggerty or the new program that State Farm is offering. I'll link a video there to that. But there's some different neat things that you can do. Let's add up the assets. Let's just assume that you have two vehicles. We're going to say that you're married in this situation. It goes similar if you're single, but we have vehicle one, and we're just gonna put that as whatever the auto is. It doesn't really matter. It can be Envoy, or it could be a Toyota or a Lexus or whatever the case is, but we're going to say that's under $70,000. Same thing for vehicle 2, we're going to say this auto is under $70,000 as well. If you're retiring with $1 million, a lot of people think the younger generation is like, oh my gosh, they got all this money, but when you push that out for 15 to 20 years, you're not likely going to have these high-end vehicles in this situation. So this is something that you have to protect correctly. You may argue this fact and leave it in the comments below what your thoughts are, but my personal opinion, this is my edutainment channel, but you're going to essentially carry something called liability. So this is if you injure somebody in a car accident. That's going to cover $250,000 per person and $500,000 per accident. This seems low because you have $1 million in the bank and you're trying to protect that $1 million that you have. Well, hold on to that thought because we're going to come back to this. There's another piece that we can add on to this policy that's going to help. Most people, and a lot of the policies I've personally written, cover only $100,000 for property damage, but in this case, I'm going to say $250,000 for property damage. The reason I'm saying that is in most states, the additional property damage is like $5 or less a year. So having the extra $150,000 additional property damage is protecting you in case something happens. I'm not just thinking about hitting another car. What if you drove your car into a wall or hit a house or swerved and hit something major? You want to make sure that you have enough coverage so that they're not going to try to deduct any money that you currently have. We're not trying to penny pinch by any means, but we want to make sure that we don't take the money we have in the bank now. It might be $30,000, $40,000, $50,000, and that makes a dent on what we're going to spend going forward. That might be the next lease on your car, or the next upgrade on your home, or a vacation you want to take. So we don't want to lose those pieces. Even though we're protected with our retirement plan, we still don't want to lose that additional income. The home is the simplest thing. You're going to have something called an RCE. That's a replacement cost estimate done on your house. That's whatever the value of your house is at the time. It's how much it costs to rebuild it if it completely broke down. You're not going to change that number. That's just what your house is going to cost, or your condo, or whatever the case is, to get fixed. In this case, there's something underneath that we're going to focus on, and this is called liability. Similar to what we're talking about down here, there's kind of a combination, but the liability, I typically like to match the auto. If we're going to carry $500,000 in the auto maxed out, then you might as well carry at least $500,000 on the home. That's a good range to be in. $500,000 here, $500,000 here. That way, if something happens, you've only got the $250 a person, which is a little bit of a risk. So you might want to do $500 for those that want to upgrade it a little bit. And some people can do $1 million and $1 million. But at this point, I'm going to show you another trick to this. So we've got $500,000 here, we've got $500,000 here, and we're pretty well protected. But what happens if something major happens? Let's just pretend I took all the money out. I'm investing into a business or something that I wanted to really do, and the money is at risk. I don't want to lose my house. I don't want to lose my 2 cars. I don't want to lose my lake house, whatever the case is. So I don't want to put those up at risk. Even though I have $1 million out, I have an additional probably $300,000 to $400,000 in assets. This is where this liability comes in. The other word for this, it's called PUP. It's a personal umbrella policy. What that is, it's essentially liability insurance. So in this liability situation, we're going to have something called a personal liability policy. And it's also called a personal umbrella policy. If you notice in the graph here, a typical umbrella is going to cover your home, your auto, any assets that you have in addition to what you're already covered. And what we typically recommend is you want to have more money than what your current insurance has. So if your liability is $1 million that you're risking, even though you might have, like we said, $400,000 or $500,000 in assets, we want to have the $1 million just to be safe. So let's play this scenario out. This personal umbrella policy is going to protect you in general. And if your auto maxes out, so let's say this $500,000 here maxes out, it's going to be in addition to. So this $1 million is going to be on top of the $500,000 that you already have. So when somebody goes to sue you for any reason or anything that you're liable for, then you're going to have that additional level of protection. Same thing with your home insurance. So this $500,000 runs out as far as your liability goes, you're going to have that additional $1 million on top of the house as well. Let's say that there's a fire, somebody gets injured in that fire, and it's $1.2 million worth of medical. They're going to sue you. Well, they're not going to go after you anymore because your insurance essentially has $1.5 million to go after. And when they look at your bank, they can't touch your retirement. So the $800, $900, $700, whatever the case is at the time, is in that account that can't be touched. And there's only $300,000 or $400,000 in assets. So they're going to go after the insurance to get that liability portion paid. Keep in mind, the liability on any of these situations can't be something that's neglect. You can't purposely do anything. It can't be an at-fault situation where you knew what was right and you did it wrong. You have to have just a sudden and incidental occurrence. For example, I turned left when I shouldn't have, but I didn't realize it, and I hit somebody. They got injured. There's the $1.5 million that I'm covering. In this case, if it's one person, it's $1.25 million that I'm protecting. So I am risking a little bit of money there, and that's why a lot of people, they'll opt in for that additional $500. And they'll have that $500,000 and $500,000 that essentially protects them to the strongest suit that they can have where they don't lose anything in that occurrence. So the last part is let's talk a little bit about the cost. I'm in Michigan, so I'll speak to what we pay, and I know a little bit of other states, so I'll try to average it out. If you're retired at this age, I would personally expect to be about $100 per car. So depending on your credit and your situation and the location that you're at, the risk zone, you should be paying around $200 a month for your car insurance. Your home insurance, the average across the U.S. is $1,250. And that's if you're going to do about a $200 to $250,000 house. And then your personal umbrella policy is super cheap. You're talking maybe $280 per year. Altogether, you're going to be paying about $2,400 here, $1,250 here, and $280 to $350-ish per year on your umbrella policy. That's the level I would personally start at. If you're afraid or you have more assets than that, then you're going to want to bump these up $1 million to $1 million. You're going to want to do $1 million here. You may want to do $1 to $3 and up to $5 million on your personal umbrella policy. Let me know in the comments below what your thoughts are. Now, if this is helpful, definitely give me a like and a subscribe on this channel, because this is really what I've dealt with customers in the past. Whenever I have somebody that has a certain amount of assets, we really just want to make sure that your insurance policy is a little bit more financially stable than you are. That way they're going after your insurance and not your assets. If you want to save a few more dollars, the next step is that you want to maybe watch my Auto 101 or my discounts on auto or my Home 101, where we go over the discounts that you can get. Maybe double check them across the policy that you currently have. I'll link that video over here for you guys to watch. Go ahead and check it out.